Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Good afternoon, everybody. My name is Samuel Barker here with Aaron Kennedy and Henry Knowles on Black and White Market Minute on Life Planning 101. Aaron, what's going on today?
Too much. Too much has been going on all week. As you well know, I kind of got in a bad mood earlier. Market started acting up, and a lot of it's just plain silliness. So that's kind of what I wanted to talk about now. Sometimes the market just gets completely irrational. Gets in a bad mood, and it's not fun. It happens quite a bit, actually. Happens all the time. But, with the market momentum is normally up. We typically forget that this happens all the time, until we're right in the middle of it again. And this has been a strange year anyway. We've already been through quite a bit back in March, April, but we're right back in it. It's crazy. Kind of give you an idea. Some of the big boys have been reporting right in the middle of earnings season. Meta came out, had double-digit earnings growth, or a little over 20%, almost 22%. And stock jumped up double digits. And that's kind of what you would expect. Great earnings, great growth. Microsoft did the same thing, had great earnings, up 8%, and jumped up 3%. And then we turn around today, Amazon jumps up 29%. That's fantastic. And it drops 8%. What is going on? We have all these expectations of where our earnings should be concentrated. Is it AI that's driving? What is it? And if that perfect thing doesn't match up, stock tanks. And then it's all about projections. And it's not, hey, I'm going to hold this company, I'm going to hold this investment for the next 10 years. It's, I'm going to hold this stock for the next 10 days. So what's earnings doing right this second? And the market just gets incredibly volatile. And it's absolutely frustrating. Amazon looks like a gift. Meta, the big jump yesterday, that seemed a little bit overblown. But either way, there was an opposite side to that trade. So volatility is usually not fun, period.
Well, and it's kind of weird, especially today. The market's down, as we're speaking, down over 1%. And I think the NASDAQ was getting down close to 2%. But if you look more broadly, about 82% of the S&P companies that have reported so far for quarter two have beaten earnings expectations, and 80% have posted revenue surprises. But we're starting to face a little bit more volatility regardless. So it's,
yes,
like you said, it's just disconnected a little bit. It
is. And, we've all seen it, and it's been part of the investment world for years now. We have actual computers that are dictating trades, and that computer is looking for a specific number. I think I've talked about this before. I remember I was an investor in Alibaba. It was probably a decade or so ago. And I'm going to butcher the numbers, but the stock only grew 52%, and the market was expecting 53%. So naturally, the stock's going to drop 30% over 1% growth, and it grew half, of 50%. And this is just the normal thing. We're looking for growth today, and I just want everybody to really grasp that we're all long-term investors. We're planning on taking care of you the rest of your life. So when we get opportunities, and that's what this is, when we have drops that don't match up with long-term investing, it's just a gift. It's not fun. It's not fun at all, but it truly is a gift. And we have to remember that. And we have to have tricks in our mind to weather the storm. Do y'all have anything that y'all do to help you through market downturns?
I just rely on valuation. You're getting a deal today relative to yesterday. It's kind of, if you go back to what Warren Buffett says, he talks about or used to talk about, I bought a company today, or I bought a company yesterday and it's down today, and a lot of people are upset, but I'm just excited to buy more at better prices.
Yeah. That is an awesome way to do it. The last big downturn, 22, I was buying this silly little leveraged market fund, and it's just broad market, but it was leveraged up 3 times. And every single day, my investing decision was, can I buy more with the same dollar amount than I did the time before? And I got into it, it got me excited. Market would go down, and I said, can I do it? Can I do it? Boom, I can. So maybe I bought 3 shares last time, and now I bought 4, and that got me through it. And I remember when the market turned and started going the other way, I started to get frustrated because I had to stop buying. But it forced me to buy all the way down to the bottom. And then when the market turned and the market wasn't even back to where it was, I was disappointed that I was already making money, but I wasn't buying anymore. And there's certain silly things that you can do. And it's not silly overall. If you look at it, you're going for sales. You're looking for fantastic companies at fantastic prices. But we just got to condition ourselves to be excited about those opportunities, because they don't happen very often. Market goes up. Over time, the market goes up. Every once in a while, once in a blue moon, once a month, once a year, sometime we're going to get a better deal than we should, and we need to be excited about that.
Well, and if you looked at Meta in 2022, Henry might remember this, looking at charts and whatnot, but you could buy Meta, I think, at $94 a share, and I had some people that had picked some shares up, and they sent me some screenshots yesterday after the market closed, and I think they jumped 11% yesterday, and they were up, I think, 5x what they invested in 22, and it just goes back to buying stuff at discounts, and they're kind of doing something similar right now. One of the things that they were down so bad in 22 was a combination of the rising interest rates that affected the whole market, but they were also spending an exorbitant amount of money on the headsets.
Yes.
And so, investors didn't like that, and there was talk of, catching a falling knife or getting value trapped by buying Meta. But,
what a mistake.
Yeah. People bought it anyways and have doubled their money a couple times.
Fantastic.
Yeah.
And it takes discipline, and it takes a belief. It really takes a belief that things are going to be better in the future. And even trying to buy when the market's going down, it's a great strategy. And you can do it on individual companies, which is definitely more risky, but you can do it on the broad market as well. And you should. You absolutely should. You should almost always have some dry powder to go out there and take advantage of things. And that's how we do it in our office. But from an individual standpoint, it's hard to see it, and it's hard to feel it. But, if you play around on the side on your own, I would absolutely suggest trying to do that.
Yeah. And it's kind of what we're facing today, specifically today, because of Trump's announcements in the middle of the night last night, is similar to the dip that we experienced in April. He announced new tariffs on 92 countries, including Canada, and things like that. And that's what's triggering this sell-off right now, which is, if you go back to earlier in the year, that sell-off, how far down did we go?
20% by.
In April? Was it that far?
Yeah.
18, yeah.
Something like that.
18.
And I mean, if you bought on a dollar cost averaged, once a week or so, you'd have done pretty well, and you'd be sitting really well right now with the recovery that came from that. So, I mean, who knows where the market's going to go over the next month or 2 months, but if you look out 5 years, it's probably pretty promising.
Yeah. Further out you look, the bigger of an opportunity this is.
Yep.
And I sincerely doubt we're going to be worse off 5 years from now than we are today. I just can't see it. No air conditionings in apartments anymore. We're all sitting in the backyard around some stones on a fireplace trying to stay warm. I don't see it.
Yep. And I mean, when in doubt, just zoom out. There you go. That's what I tend to do.
I love
Calms
it.
me down.
And you just look at where we are in the world. Look how exciting everything is. I mean, AI is definitely a big one, but we need more energy. We're pushing for nuclear, so that's a huge opportunity. Quantum computing is maybe a decade away. I mean, if you think about it, if you had 10 years to get ready to buy Apple before it took off, or Microsoft, or any of those, would you do it? 10 years isn't that far off. We have this huge new investment in defense. We have defense companies that are popping up out of nowhere. So it's not just the big Lockheeds and Northrop. There's new companies coming out. Our government's spending like crazy, so we have this new opportunity in gold and things like Bitcoin. Speaking of energy prices are pretty depressed. We definitely don't have enough. We're past the growth stage of here in the U.S. of our exploration and what we're pulling out. So more than likely that's going to mean higher energy prices in the future. I mean, there's just so much, and then we're not even talking about just plain old technology, the things that's changing our life every day. So there's things to invest in, and there's things that are going to be exponentially bigger than they are today. And, golly, what an opportunity. Just got to do it.
Yeah, the world was a whole lot smaller. Or let me rephrase: the world was a whole lot bigger and slower 100 years ago. So if you can, I mean, who could have guessed we'd be here today? And then, what does the next 100 years look like?
Yeah.
I mean, we're going to be flying around on little mopeds.
Yeah. I mean, we're Moore's. This is Moore's law, where everything's getting twice as fast and
Half as big,
half
or
as expensive.
Yeah.
But it's almost on every single thing in our life. Everything's getting better. Everything's getting, I don't want to say cheaper, but it's getting more cost effective. Things are amazing, and it is accelerating at such a pace. It's hard to remember yesterday, much less 10 years ago.
Yeah. Well, and I mean, going back to kind of short term versus long term, right now, there are legal challenges to these tariffs, and Trump is kind of plowing a new path that hasn't been plowed before in terms of how he's implementing these tariffs. And
Yeah.
so if the lawsuits overturn these tariffs, I mean, what does that look like short term versus long term? What happens to the markets? Do you have any ideas on what that looks like?
I don't. It's just so strange, such a hate for Trump. It's Americans trying to hurt America. That's what it is in my mind. I'm not big on just throwing tariffs at every country out there, but I know our goods and services are taxed out the wazoo in other countries. And I think we spoke about this earlier. He's not looking. He's looking for fair trade, not an advantage for us. Just, hey guys, come on, we're buying stuff from you. You're buying stuff from us. Let's make this fair. And as long as it doesn't impede growth or impede trade, I'm all for it. And just the mere fact that we're fighting it. What if we went to a world that there were no tariffs? And then that's kind of silly to think about. We do want to protect some of
National
our
security interests.
our production and that kind of thing. So I can see a need for some of it, but just as a blanket, we're going to tax you 40% of that, and if you tax us 15%, then that's completely irrational.
Yeah.
That doesn't make a whole lot of sense in my mind. So, anyways, I think who knows? Short term, the market could definitely get more volatile, which would be funny. But long term, I think it hurts us. It will reduce fair trade. It will push for more offshoring of industry. And I've loved the idea of bringing back some industries here to the U.S., better jobs, better high-paying jobs. I like that idea. So who knows what's happened, but I do think long term it does hurt us a little bit.
Well, and it's occurred to me just now that it's possible that he's implemented all these tariffs with the knowledge and expectation of this lawsuit. And in the event that it does get overturned, I mean, it's kind of just he definitely raised awareness about the unfair trade practices and different things other than just tariffs, currency exchange, manipulation, and things like that, that didn't get the appropriate attention beforehand. And then not only that, it could be kind of a political, I've done my best, but then they've put these hurdles in front of me and I can't do anything better. And so maybe it's leverage for politics too.
Maybe.
But I know that kind of weird, we're facing more volatility today, but GDP exceeded expectations drastically earlier in the week, but then we had a lowered jobs report, only 73,000 jobs added, which is what was below forecast, and unemployment's at 4.2. So it's just the Mr. Market going crazy one way and another, depending on one day news.
And actually love the jobs report. How many government employees are we eliminating? Our unemployment should be ticking up a little bit. I don't think they've all been absorbed by the market yet. We expect that, but it gives Powell an opportunity to lower interest rates and save face. So we need lower interest rates. So this could be a great opportunity and another reason just to say, wow, look what kind of opportunities are out here every day the market goes down.
Yeah. It's kind of reminiscent to his first term whenever interest rates were being raised under him, and he was arguing against that too, and now we have high interest rates again.
Yeah, 2018. I'd say so far this year it's almost not picture perfect, but very similar to how the market traded 2018 when Trump was talking, market fell, came back, and then heading into late Q3, Q4, we dumped again. But
he does do a lot of talking.
He does do a lot of talking. And that is one part of the market that is worrisome for me is our real estate market. That is by far the largest asset the average American has. I mean, that is the wealth of America is our real estate. It is something that is not moving right now. Homes are not selling. Homes are not being built. Homes are not being bought. So that is not good for the people. And the biggest thing holding us back there is interest rates and how they are. And it's making real estate unavailable to buy.
Yeah, I've only in the past couple of weeks heard of difficulty, buying real estate or hearing, real estate's too expensive because they can't get financing at these rates. So it just affects the debt to income and the monthly payments relative to their income too much.
Bring it down. It's going to help us all.
Yeah. Well, do y'all have anything y'all want to touch on before we conclude here today now that Brent has brought us his goodies, the food?
No, all good. All good. And hey, just remember, we're all human. We're working as hard as we can. When volatility picks up, this is normally when we find our best opportunities. And it's not fun, but it's just part of it. And we're looking forward to taking care of everybody the rest of our lives and the rest of your life. And we end up taking advantage of these times.
And odds are, that time frame's longer than tomorrow or next week.
Yes.
So let's think 5 and 10 years.
Yeah. Or 30 or 40.
Yeah, there you go. Hopefully. So, all right, everybody. Thank you very much. That's going to be another episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.